Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.2% there. On the S&P Nasdaq, up 0.3%. Semiconductor did get hit though, 1% negative. Dow 0.3% negative. Russell 2000 is green. Transport down a little bit. Banks got hit, 1.5% negative. Energy is up 2.5% in this kind of mildly down day today. Looks like biotech is down a little bit. Healthcare down. Home builders flat. Utilities up 0.5% positive. Retail flat. Emerging market down 1.3%. Bitcoin down up 8%. Gold up. Silver up. Miners flat. Gold, silver, miners been making a move last couple weeks. Dollar slightly up. Oil up. Treasury bond up. VIX popped. Let's stick with S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed on Friday. And it looks like we gapped down here. So this is where we opened up this morning, right? So it looks like that down gap was quickly filled by the buyers, and that's a good sign because we're already dealing with a two down gap. That's a secondary down gap. There's another down gap above it, and with those two down gaps being open, we talked about this last couple weeks that we're gonna go through some miserable end of or second half of the February month, and we did. Today is the last day for the February of 2022, and we can see how hectic it has been for the buyers in the last couple weeks there. So at this point, making another down gap, letting another down gap opening, sustaining for the bears is going to be a bad situation for the bulls. So bulls quickly analyzing that as a necessary to go up and fill that gap, and they did that on the second hour, and that's a good thing. And then once that gap gets filled, what happens? It's going to act as instant resistance. And that's what happened on the third hour with that red candle there. And then came down. And what happened was, you can see that my, short-term moving average. You can see we're kind of zigzagging all over my short-term moving average. You can see that short-term moving average did act as strong resistance. You see this light green moving average right here going into here. Well, that's a micro-term moving average. We're going to talk a little bit more about that in a little bit. But that short-term moving average acts as a resistance. We're right in that vicinity. We've been zigzagging all around it. And it looks like fourth and fifth hour, that level acted as a resistance, right? And that's why we kind of see that upper wick here, not able to close above. And finally, on the fifth, sixth hour, we were able to make that thrust breaking above the short term. But I think just breaking above the short term moving average isn't a whole lot of deal at this point, because we've done that pretty much all day long, or on Friday too. We're kind of, again, being slightly above is not going to help. We need to see the trajectory changing and the price start to using that short-term moving average, utilizing it as a support, and then surf it up. But what's really important, this level, you can see, you might be thinking, why do you have that 437.63 annotated? Because if I kind of zoom out here, you can see that that's a strong and important pivot. Why pivot? Because it's a prior support and then act as resistance, and then been acting as resistance for the last 2 days. So definitely this market is aware of this 437.63, and it is important for us to understand this level is important. It's a make or break level, I think, for the bulls. I think the bulls want to put some pressure on the bears. They need to break above it and finally fill this gap. Keep in mind though, my midterm moving average is hovering in that vicinity and protecting this down gap right here, right? So that's going to be double resistance once we get up there, if the bulls get up there. But first things first, 437.63 must be reclaimed, and we need to close above it. We can't see, let's say if we do see buyers coming up tomorrow morning, first couple hours, and we see something like this, and then like on the second hour, we see like a long upper wick and then this thing coming back down, that's going to be a bad sign. If we see a follow through of that, that's going to be a really, really bad sign. The short-term moving average is going to continue to decline, you see. So what we need to see, if you're a buyer here, you need to see this thing not only getting above it, but we need to hold above and close above 437.63 all day. The confident looking candle if you're a buyer. And that's going to be the first objective for the bulls. If you're a bear, obviously, breaking or keeping this level and, making sure bulls do not reclaim this level. If bulls do get above that though, bears got, a couple options here. That gap area is going to act as resistance, and then the midterm moving average. The midterm moving average does have a pretty impressive resume. You can see last time we hit that midterm moving average, well, things got extremely, extremely miserable for the bulls for like 2-3 weeks straight. So we can see that midterm moving average does carry some weight, and bulls are going to get scared of that 444 level once we get up there. I think right now what bulls are working with is the micro-term moving average. Micro-term moving average did act as and supporting the bulls. You can see on the last hour, resistance, 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 resistance. We finally reclaimed that level. You see that trajectory of my micro-term moving average change to the upside. It is no longer falling to the downside, and then price comes down, hit it right here, and the 5th hour, the 6th hour move is bullish. This is not a coincidence. This is not a mistake. This is not a random occurrence that we're seeing these kind of activities occurring this entire month of February. So let's check out that oscillator and see if we can extract any more information. So first of all, we can see that bullish divergence, which I've been talking about, right? And you might be wondering, okay, what is that blue purple box? Why did you draw that over there? Well, that's the level where all the bulls, all the buyers got stopped out. Some of you watching this, you're admitting to yourself, yeah, I had my stops right there. Yeah, when this thing got down, I was in total panic, and so I closed out my long. This is a level, definitely that's being that kind of a prominent, you know what I'm saying, support. Most people are gonna place their stop. If anybody, right? Any longs went long anywhere here, where do you think they're gonna place their stop? If the majority of people place that previous well-known low, which is this, and market knows that. See, that kind of stuff doesn't work. You gotta stop playing that stupid game where you think you can hide from the market. Okay, I'm gonna place my stuff just underneath right here. Bulls got market. You know why market came down this much? Is because you guys put your stop just underneath it. Market made sure to come down, take your stop before it goes to the other side. That's what happened. Right? So don't ever think you can play this hide and seek with the market. Market will find you, take your stops out, make your life miserable, and will go up without you. So don't ever play that game. And that's what happened. But my oscillator is true. My oscillator is telling me, hey, you know what? That's what the market is gonna find you. But right now, we're looking for that pop. You can see right there, this oscillator, we see that big downturn somewhere here. All of a sudden, the oscillator does not willing to go down, right? This is what you can kind of see, that slingshot action, right? Kind of like a slingshot action. Hence, that oscillator coils back and forth. It goes up while the price comes down. And then you can see how that slingshot effect goes and just goes right up, right? And then the price just goes up for 2 days straight. And so, and because market realized, it pushed, and also this is what is known as exhaustion gap, right? We see that gap down. See, the down gap, when it happens at the top of its move, it's considered a breakaway gap. When it happens after down move, after it's been down for the entire month of February, well, that's what we consider an exhaustion gap. And you can see that with that move last 2 days, we can definitely say that was an exhaustion gap. And plus, we did have that oscillator showing us that bullish divergence. You can see, isn't it crazy that, market is just tanking and then oscillator goes up, right? You don't see that happening a lot. It's rare you see that. And then when that happens, we'll see kind of a, dramatic upturn, especially when we're in a primary and the long-term uptrend, right? So the oscillator, you can see, we do see that initial cross. So this is what's going to happen. It's going to be very, very simple. If bears protect this resistance and we start to see this market tanking again to 420 or lower, we will see it coming right back down, and then we'll see something like this, right? Cross, price tanks, and oscillator comes right back down. If bulls put up some courage and make this up move and face that midterm moving average and the gap area, the oscillator is going to start to oscillate back and forth. And that's not a bad thing. That's what bulls need to do. You guys remember, bulls been doing this for the last couple years. They love to kind of bring up that oscillator to the top of his band and then kind of use that pancake strategy to move sideways while the price keep going higher. But it's not going to be easy this time around because we're in the short-term, mid-term downtrend with my mid-term, short-term moving average still declining and the gap area and double resistance in that vicinity. I'll come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.